I've often talked about holding companies and setting up holding companies, and that's something that our company does. We have a done for you service where we'll set up your holding company, we'll set up your operating company. But let's talk about the holding company principle. One of the things that makes a holding company special is the way that you can organize your businesses. Now, this is very different from what anyone else is talking about on YouTube. Most people talk about get that one business. The holding company concept means that you're already predisposed to have multiple businesses. I've had multiple businesses since 2009, and I really started to deploy the holding company concept 2017. That was my first holding company. Then I created a second holding company for real estate, which didn't work out. Then I created my third holding company. So this is the mindset. This is the thing that I want to get accomplished in the future. Right now, I have a YouTube company, I have an online course company, I have jewelry business number 1, jewelry business number 2, and very soon in the next 3 months, we're going to have storage auctions. Now, I have a holding company that I'm going to have taxed as a C Corp. And now you're asking, like, why do you want to have your holding company taxed as a C Corp? Why don't you want to do an S Corp? Great question. Purpose and intention. My goal is to create an economic cash wave, meaning stack all these businesses together, move the money up to the holding company, and then get taxed at 21%. I'll put myself on a salary of $500,000, and that's what I will take out of the company. And then there's another way I would take stuff out of the company. I would do a company loan. This way you don't have to pay taxes. Now, the thing is, with a company loan, you have to have a written document, you have to have a pay schedule, but it gets very interesting. I can do an interest-only loan for the next 30 years. So there's a way that I could do it. And this is the killer thing. I could take out as many loans as I want to. As many as loans. So if I want to take out like 6 loans, I could take out 6 loans very easily. So this is a way to avoid taxes, because I looked at doing a dividend or doing a payout or doing a bonus or just dividend property taxes for like 20%. And the thing is, the best thing to do is to have salary, which I can draw out. I'll pay 37% in taxes, and then to do corporate loans for me. Like me and my boo, when we get married, I'm gonna take out a corporate loan to buy our house. So I'll pull out $2 or $3 million as a loan, as a documented loan. And this is one of the things that I can do because I'm the boss. Like, let's say I wanted to raise my salary. I can raise my salary to the payment amount that I need to pay off the corporate loan. So my $500,000, that stays. I get that money. The $500,000 would be about, I would say, $30,000 a month after taxes, because they're going to take $208,000 in taxes. So yeah, we'll be doing close to $30,000 a month in cash flow. But this is the beauty. Let's go ahead and say I'll buy this house. This is where it gets really, really interesting. Like, I could go ahead and set up an interest-only payment plan, right? Now the interest, like say I borrowed $3 million from the company. The interest-only loan payment would be $17,000 a month. Well, what I can do is raise my salary to cover that $17,000. So the company is literally paying the company back, and I still get to keep my $22,000. This is the ability of being the king, being the owner, and designing the plan. So that's how I will take money out of the corporation. Every time I need to take money out of the corporation, I would do an interest-only loan for 30 years, write documents, and just make the payments. And that's the way for me to avoid taxes, because essentially, here's where I want to, this is what I want to do. So going forward, have my holding company as a C Corp, right? Pay 21% plus Georgia state tax, then take the rest of that money and do a corporate loan to the real estate company. Now, real estate is very, very different. I would have the real estate company in my name. I would own it, or maybe I'll do a partnership with my wife where we would own that real estate holding company. So this holding company over here, the business holding company, will be completely separate than the real estate holding company. Why? Tax appreciation, tax benefits. If we were to blend the holding companies, we would lose so much money in taxes, it would be stupid. So we would have, now this is the thing, we can loan money from holding company number 1 to holding company number 2. Now, we can loan this money to this company and we can set the interest rates or whatever we want. So, one of the things that will happen is we will take the money from holding company number 1, create a corporate loan to the real estate company. And every time we create a corporate loan, because essentially what I could do is pay taxes and let the money sit in the bank account until it gets up to $6 million. Then once we have $6 million, we'll do a $6 million loan to the real estate company. Then we'll use the $6 million as down payment on an apartment complex. So now we have to service the loan, 2 loans. We have to service the holding company loan and we have to service the real estate loan. But here's the beauty of it. The money coming back for the real estate loan just goes back into the capital base for the next $6 million loan. So we'll just add more money for real estate because my goal is to start this process in 2027. My goal is to get my companies to $3 million a month in profit, maybe more, and then pay taxes, and then every 2 or 3 months be in the position to buy an apartment complex. And then, because essentially, I don't really see myself taking a lot of money out of the company because I already have the cars, because I can buy the cars with my salary. I'll already have the house. I'll do a corporate loan for the house. And then essentially this is to stack money because here's the ultimate plan. And this is why you want to have a holding company. Well, I'll have 2 holding companies. I'll have my business holding company and I have my real estate holding company. The real estate holding company is a 3-year situation, 2027, 2028, 2029. The goal is to buy 3 to 4 properties every year. So we would, in 2027, 2028, 2029, 2030, we will have 9 to 12 commercial apartments under ownership. And the goal is to get to $1 million a month in passive income. Now this is where things get fun because this income will be coming out because I'm over here. I'm not taking distributions out of my corporation. So I have my salary. And then I have all of this money that's coming from the real estate. But this is the key. I have a lot of depreciation. So let's say we do 1.2 million a month real estate proceeds after servicing debt, after paying back loans. Then that's like 14 million a year. The depreciation will be, so this is the good news. We have the real estate doing 14 million a year, right? With depreciation works out 5.2 million. So our taxes will be only on the 9 million. So that's a lot of money saved. That's like $400,000 per million. So that's like 400, 800. That's like $2 million. That's $2.2 million in taxes saved because of depreciation. So at this point, I can do whatever I want. At this point, if I wanted to sell my C Corp business, I could sell it and walk away and have $1.2 million a year, $1.2 million a month income coming in. Let's say after taxes, let's bring that down. We'll probably be down at $700,000, $800,000 a month for the rest of my life. Oh, wait a minute. It goes up because it's an apartment complex and rent goes up. So that's the plan. And that's why I'm doing the holding company. Now, holding company number 1 is a cash flowing holding company that has multiple businesses in it. Holding company number 2 is a real estate holding company that only holds real estate and pays out a lot of money. So let me know what your thoughts about holding companies. And if you need it done, we have the ability to set up your holding company, your operating company, and explain corporate taxes to you and how they work. Let me know if you want it. The link's below. It's called the Holding Company Blueprint. What we do is establish your holding company, we establish your operating company, and we teach you all of the details of how to set up a holding company operation. One of the things that we do is go into corporate banking. Corporate banking is very, really important. We teach you how to set it up. We teach you how to deploy it, and we can set up your holding company first. We have to set up the holding company first. Then once that's set up, then we set up your operating company. Now, if you already have an existing business, and this is something a lot of people want to do, well, they want to turn their current business LLC into their holding company, which could be possible, but it depends upon what you have going on. Then we'll walk through the taxation. Should you turn this into an S corporation, or should you turn it into a C corporation? It depends upon your goals, wishes, and what you're doing. And also, we do not set these up for real estate companies, because typically you want to do something that's very different for a real estate organization. So one of the things you have to understand is how to set it up. We'll walk you through it. And you can set up a holding company for your real estate business, but it has to be different. It has to be very, very different. So for those of you who need help understanding the holding company concept, this is a service that now we provide.